Hello everyone. This is the pre-market report video for today, 8th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday for the 6th straight session, Nifty closed negative, and in that 6 sessions, Nifty fell over 1400 points. Sector-wise, except IT, all the other 12 out of 13 major sectors closed negative. Only IT was positive because Bloomberg released their quarterly results expectation, and as per them, most of them expect to increase their EBIT margin, especially Infosys, Tech Mahindra and L&T Mindtree to have significant sequential quarter growth improvement. Then another stock that was surprisingly positive was ITC, since NCLT approved their hotel business demerger. On the other hand, HDFC Bank was significantly volatile and negative. Part of the reason most of the analysts divided into two groups. One group saying that they are very positive on HDFC Bank like Morgan Stanley and Goldman Sachs, and another group like Nomura and BNP Paribas, they are negative. So there is a tug of war going on between. Hence only it was very volatile. Yesterday after 3 p.m. over 70 lakh HDFC Bank shares was exchanged between the investors, which is almost 40% of the total volume. And based on this, it looks like the entire volatility on the Nifty and Bank Nifty, it appears caused by HDFC Bank. About institution, FII net sold for the 6th consecutive day, and yesterday also it's another heavy selling day in the cash market. The net sold for 8,300 crore rupees. On the other hand, DII net bought for over 13,200 crore rupees. So despite this heavy buying by DII, yesterday Indian market fell substantially. In the F&O market, in both index future and index option, FII net sold for 20,000 crore rupees. Thus, after a long time in the future index market, FII got higher short position 53% and 47% on the long side. Overall, it looks like FII completely turned bearish now in all the market segment. Then coming to US, because of the strong jobs data which was released last Friday, at present CME Fed Watch tool completely ruled out the possibility of 50 basis point rate cut in the upcoming November month FOMC meeting. In fact, now it started to give the probability chance for pausing the interest rate by around 13% and still predicting 87% chance for the 25 basis point interest rate cut. All these increased the 10-year bond yield to above 4% from last Friday around 3.85%, which in turn influenced the US market on the negative side. Then around 2 a.m. Eastern time, Israel conflict was intensified very much. As a result, oil price increased over 3%. At the time of this video, WTI crude trading near $77.5 per barrel and Brent crude closed at $81 per barrel. And at the same time, US market crashed. Dow Jones decreased 0.94%, S&P went down by 0.96%, whereas Nasdaq decreased by 1.17%. In case of US VIX, it increased 18% and moved to 22.6 from around 19 on Friday. Here, please note, this week, US consumer inflation data for September month and last FOMC meeting minutes are due to release, so we can expect that related market nervousness as well. In line with that negative US market, early morning today, GIFT Nifty closed at 24,895. Here, for some unknown reason, very strange, yesterday and last whole week, GIFT Nifty got the premium of 200 points with the spot market. So for now, it's indicating a gap down opening of over 100 points. Regarding Indian ADR, as it is, Infosys alone closed positive and Wipro was down less than 1%. All others closed negative of around or over 2%. So if we calculate the arbitrage, banks indicating furthermore negative, like HDFC Bank has around 0.5 to 1% negative arbitrage and ICICI Bank got minus 2%. Hence, overall, as per ADR, banks clearly indicating negative trade and IT was more of flat to mixed trend. As a summary, compared to yesterday, global momentum is not good, it's deteriorated now. Oil price now increased above $80 per barrel. I mean, as long as it trades below $90 to $95 per barrel, we really don't need to worry too much, but still, as a net oil importing country, it seems a little bit worrying. And for now, GIFT Nifty indicating a gap down opening of over 100 points. But please remember, at present, the premium between the GIFT Nifty and the spot Nifty Nifty is around 180 to 200 points, which is completely not sustainable. So that might turn anytime and might influence the price action. And also, if this Israel conflict escalated to another level means, then that will also impact more negatively. Just for info, yesterday 82% total number of stocks and 12 out of 13 major sectors were declined. Only 15% of the stocks advanced. And one more thing regarding Reliance, yesterday in the aftermarket hours, they made an announcement that they are going to release their quarterly results on October 14th. Anyway, moving on, as per stock open interest, Federal Bank, Axis Bank, HDFC Bank, ICICI Bank, SBI, PNB, Kotak Bank and MCX, overall over 96 stocks got an increase in open interest along with a negative close indicating the short build-up. On the other hand, only 13 stocks got an increase in open interest with a positive price close, such as AU Small Finance Bank, IDFC First Bank, Bharti Airtel, Tech Mahindra, ITC and Infosys. All these stocks got the long build-up. Regarding the things to look out, after 1 week of holiday, today Chinese market will be open. So to some extent that expects to influence the metal stocks. Then in the early morning, Japan household spending is due, and in the night for US, their trade data and short-term EIA energy outlook are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 70 points gap up. However, after the first hour, it turned completely red and broke down below the September low 24,750 and finally recovered some and closed at near 24,800. Thus on the daily chart, Nifty formed a third consecutive bearish candlestick pattern with fifth consecutive session lower high and lower low formation. In addition, it broke below the 50-day simple moving average and fell closer to the lower end of the Bollinger Band, so all indicating the continuation of negative bias. Now the lower line of the Bollinger Band is around 24,650 and the September month low was at 24,750 mark. Hence, if Nifty holds 24,650 to 24,750 level on a closing basis, then there is a chance for the rebound towards 25,000 to 25,100 zone. But a decisive break below might lead the Nifty to drop to 24,350 to 24,500 level, which coincides with 38.2% Fibonacci retracement level and 100-day simple moving average. In case of Bank Nifty, roughly same as Nifty, it opened 80 points gap up, however fell more than Nifty and decisively broke 100-day exponential moving average and closed around 50,500 mark. Thus on the daily chart, Bank Nifty formed a large bearish candlestick pattern with sixth consecutive lower high lower low formation. However, again like Nifty, Bank Nifty managed to defend the September month low 50,350 on the closing basis. A decisive fall below this level could drag the Bank Nifty towards August month low 49,650. Hence now, as long as Bank Nifty below 100-day moving average around 51,000, we can expect the weakness to continue. According to weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,000, with maximum new call option writing at 25,000 strike, followed by 25,100 and 25,500. On the put side, the maximum open interest was at 24,000 strike, followed by 23,500 and 24,500, with maximum new put option writing at 24,700 strike, followed by 24,000 and 24,100. Thus, from options data, it's indicating that Nifty might face resistance at 25,000 to 25,100 level on the higher side, with support around 24,700 to 24,500 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.